Are you planning to buy Tesla stock in hopes of getting rich? If so, be sure to stay tuned and keep watching. Just as scientists claim that humans evolved from primates, the two vehicles transformed from two-wheeled vehicles to variations of today's four-wheeled vehicles. He said more innovations in the automobile industry. Innovations include electric cars, or EVs, which are manufactured by major companies, with Tesla leading the race with the future in mind. Many people are rushing to buy Tesla stock in hopes of getting rich. This video will discover why buying just 3 shares of Tesla in this crash will make you rich. Tesla is an American automotive and clean energy company that designs, develops, manufactures, leases, and sells electric vehicles. On April 20, 2022, Tesla reported first quarter 2022 net income of $3.3 billion, a quarterly record exceeding Wall Street estimates as revenue rose 81% year over year to $18.1 billion. This, among other news that has made it to various headlines, may be the reason why people want a piece of Tesla. It is known to people familiar with the industry that market forces change stock prices every day. Stock prices change due to supply and demand. If more people want to buy shares, ask then sell it, supply price increases. However, Tesla shares are also volatile. However, Tesla stock was trading at more than $1,200 a share in early January, putting it close to its all-time high of $1,243.49. Wall Street believes the stock is worth about 100 times Tesla's earnings and is about 10 times more valuable than traditional automakers. Again, stock markets are difficult to predict and may rise or fall very quickly. Mark Delaney, a Wall Street analyst at Goldman Sachs, increased his January 2022 price target for Tesla stock from $1,125 to $1,200 while maintaining a buy rating. He also chose Tesla as his top pick for 2022 and described it as the best idea in the electric car sector. He also stated that Tesla has the price leadership in electric cars through its employees. Tesla Inc. CEO Elon Musk said he agreed with Cathie Wood when she said Tesla was worth $300 per share if it performed well. Cathie Wood is the founder, CEO, and CIO of ARK Invest, a $60 billion firm that invests in innovations like self-driving cars and genomics, and manages multiple actively managed exchange-traded funds at the same time. Wood said in a recent interview that her base case on Tesla is around $3,000 per share, and she went on to say that her estimates of Tesla's success have risen. She explained that this is due to its market share having increased significantly instead of decreasing, despite the entry of other companies into the electric car industry. ARK Invest believes Tesla will be able to produce at least 5 million to 10 million vehicles as early as 2025. An email obtained from Tesla employees by Electric, an American news website dedicated to electric transportation and energy, stated sustainable. Tesla will eventually be able to offer a fully autonomous transportation network, which will be called the Tesla Network, and which will bring in a lot of money as well as a high margin. Musk reiterated that he agrees with ARK Invest's $3,000 target if the company executes well, and also stated that a $3,000 stock price would bring Tesla's valuation to around $3 trillion, making it the most valuable company in the world as of today. Tesla is considered the most valuable car company in the world, worth more than $730 billion. Cathie Wood is reportedly on a buying spree for Tesla shares as prices continue to fall. ARK Investment lost nearly 0.5% of its position in Tesla when the company's shares rose, and it sold 8,100 shares worth an estimated $5.76 million. For this reason, Tesla remains one of the innovation-focused ETFs that Wood follows closely. Piper Sandler Companies, an independent American investment bank and financial services company, announced via Insider.com that it has decided to give love to Tesla on Valentine's Day, placing a buy rating on the said stock and raising its price target to $1,350. This means that buyers can expect a profit of up to 55% on. Share the company, updating its valuation to take into account new deliveries, capital expenditures, and margins. Piper said she expects Tesla to generate more money because the stock may be worth more. Morgan Stanley's Adam Jonas, a noted Tesla bull, stated that the current EV landscape is a race and so far Tesla is winning. He compared the electric car industry to a marathon and said that Tesla is leading at mile 21, while other companies are still at mile 2, while others are still tying up their shoes, figuratively speaking. He supported this claim by explaining that recent vehicle delivery records are proof that Tesla's positions are still strong and getting stronger. He supported this claim by explaining that recent records of vehicle deliveries are evidence that Tesla's position remains strong and is getting stronger as the marathon progresses. He also revised his price target on the automaker's shares to $1,300 from $1,200 and expects delivery numbers to reach 2 million this year. To make sure our videos are updated, make sure you hit the subscribe button and hit the notification bell. In 2021, Tesla delivered more than 900,000 cars and plans to increase that by 50% this year. Many analysts' enthusiasm for Tesla stock focuses on the company's operating experience during the pandemic. It is a well-known fact that the world was almost at a standstill when the COVID-19 virus spread across the globe. At that time, most car manufacturers faced many problems, such as a shortage of chips from their supply chains. Despite this, Tesla has pivoted among suppliers by rewriting its software to keep its factories running. It has even opened new manufacturing facilities in Austin and Berlin, no easy feat considering the economy's downward spiral during the pandemic. These new facilities, in addition to those in Shanghai and California, will increase operating margins as well as the volume needed to manufacture more vehicles. Furthermore, the newly built Berlin and Austin plants provide the opportunity to achieve higher gross margins as a clean energy company. Tesla's mission is to accelerate the world's transition to sustainable energy through electric vehicles and increasingly affordable energy products, which is why construction of the Tesla Giga Nevada began. The Tesla Giga Nevada, also referred to as the Tesla Gigafactory, is a lithium-ion battery and electric vehicle component factory in Flor, Nevada, expected to be the world's largest building powered by renewable energy to achieve net zero energy. This structure aims to solve the Tesla battery crisis. This Gigafactory is said to have a planned area of over 1.9 square feet, which aims to increase production to an additional 500,000 cars per year. Why buy Tesla shares? According to a recent article in Barron's Magazine, an American weekly magazine covering U.S. financial information market developments and related statistics, now is a good time to buy Tesla shares. Although some analysts are predicting a collapse, while others are predicting gains of more than 100%, the debate is still far from settled. But there are two metrics that make shares of the electric vehicle leader look unusually attractive. Analysts say the average price target is around $984 for Tesla shares, which would imply a 35% gain from recent levels. The last time the metric looked that good was in March 2020, when the market sold off as the pandemic hit the US. Some may wonder what proves that buying Tesla stock will make them rich. For one, it was reported on December 28, 2021, that Musk disclosed Tesla stock sales totaling $16.4 billion since early November, amounting to nearly 10% of his stake in the company. Additionally, Tesla reported Q1 2022 net income of $3.3 billion, a quarterly record exceeding Wall Street estimates as revenues surged 81% year over year to $18.8 billion. Currently, Tesla stock sits at $761.61, which went up by 5.14%. With this information mentioned earlier and the data presented in mind, people who have the means and opportunity to invest in Tesla stocks should do so. Of course, only if they believe this is a worthy investment after conducting a thorough study of this industry. Furthermore, the duration of this video mentioned several known investors and analysts, and they have established experiences in their respective fields, so their words should mean something valuable. Their statements are carefully formulated before sharing with the public, so one can rest assured that they can be considered a piece of sound advice. Remember that investing in stocks comes with certain risks and good profit. It is important to note that before investing, you should carefully study where you are putting your hard-earned money and exercise caution every step of the way. To see more of this content, watch our other videos.